Good morning, guys, and welcome to our YouTube channel. My name is Andrew. Today I've got a very exciting topic. We'll be discussing prop firms. Today we'll be discussing what exactly are prop firms, how can you make money, the types of prop firms that you can find, the good and the bad side of prop firms. Then I'll give you my honest opinion on whether you should go for it or not. So right off the bat, what exactly are prop firms? If you are new to trading and wondering what are prop firms, these are trading companies which allow you to trade their capital. It's usually after you have proved you can be consistently profitable. So most of them will have some form of a challenge which you have to pass. You have to make from 6 to about 10%, usually within 30 days. And then there's another second step where you have to make maybe 4 to 5% within 60 days. Then they'll give you a live trading account. So basically what they're just trying to do is they don't want to give you a live account when you just passed by luck. They want to see someone who knows what they're doing, someone who understands risk management, somebody who has a trading strategy which has been tested and proven. Some of the examples include FTMO, you probably hear this a lot, City Traders Imperium, Enfoid, Trader Central Fund, Funding Talent, Audacity Capital, Blu Fx. These are just a few of them. There are a lot of prop firms out there. How can you make money? Well, when you think about it, the major reason why most traders fail is lack of sufficient capital. Remember, trading is just like any other business. Now, if it is like any other business, you need significant capital for you to get started. You can check out my video where I talk about how much you need to get started with trading. So, the mistake that I see with most people who start trading, they come in maybe with $100 or $500 or sometimes $1,000 and expect to make maybe the same amount. You can do it, but it is not very easy. And that's where prop firms come in. So prop firms will allow you to pay a certain subscription or pay a once-off fee. Once you pass that verification challenge, they'll give you a much bigger capital. And then as you are trading, after you've passed the verification and the challenge in a demo account, when you trade within, I think, 30 days, when you try to withdraw your money, they will keep a certain percentage of your money and give you the rest, which I think is a good deal because on average you're sharing 50 to 85% of the profit when they are the ones who are giving you the capital. Now, you just have to be careful to follow their trading rules. Some of these prop firms are really, really strict. You always have to use a stop loss. You don't have to trade news. Don't have to hold some of the trades over the weekend. You may also have to consult them if you're going to hold trades overnight. But basically, you make about 50 to 85% more money than you would if you had a small account. There are mainly two types of trading prop firms. There are many different variations, but in my opinion, there are mainly two types. There are ones where you have to pass a verification test before you're given a live account. This is to remove the amateurs from the professionals, basically. A good example of these ones are FTMO, Enfoid, there's Funding Talent, Trader Central Fund. So these, you have to make a certain amount. It's usually about 6 to 10% within 30 days. And then you have to make 4 to 5% within 60 days, which can be doable. I know 5% is an exception because 5% on the lower risk you have to make 6% within 180 days. And once you've passed, they'll give you an account 4 times what you had applied for. I will make a video where I'll go in detail about the 5%ers as well. The second type that you should watch out for is the monthly subscription ones. These the monthly subscription ones, you start right away with a live account. A good example is Blu Fx and Audacity Capital. I think Blu Fx has got the 25 and the 50,000. Audacity Capital will start you with $15,000. you trade, and at the end of the first 30 days, whatever you make, you share 50-50 with the prop firm. Now, it sounds good, right? So I want you to think about it. The good side of prop firms is if you have low capital and you know how to trade, you have backtested your strategy, you have journaled enough trades, you know you have an edge in the market. Prop firms are amazing in that they can really leverage your money. So for instance, you pay about $650 to $800 for $1,000 account with a leverage of maybe 1 to 100. So you're trading with about 10,000 buying power. And if you are consistently profitable, you're hitting the 10% mark, they will increase your account by 25, some even double it, but about 25% within maybe 3 months. That's how you can reach the 2 million mark. Your initial capital is small. You're talking about $100 to maybe $1,000, but your trading capital will be much larger than that. The profit split, I think, is fair. 50 to 80% when they are the ones who are putting up the money is very good in my opinion. Some have good trading platforms such as FTMO, 5%ers. Now you have to be very careful when choosing these trading prop firms, because some of them will have their own trading platform, some will link you to some other brokers. Now when you're choosing a broker, you have to be very careful depending on your strategy. If you're scalping, you need to look at things like the spreads, the commissions, also the pairs that they have. Those are things that you have to consider. And then, of course, they also have, some of them have good support. I know FTMO and 5%ers have great support. Now, the bad side, so for those, especially for those, on the bad side, especially for those that have live account, the biggest problem I found was the leverage was too low. I think Audacity capital is either 1 to 3 or 1 to 5. On the 5%ers, the low risk is 1 to 6. And on FTMO and most of them, it's 1 to 100. 1 to 100 is not that bad, but 1 to 100 is good if you're learning, in my opinion. 1 to 6 is quite hard, because even if you go for the $20,000, your maximum buying power is 120,000, which is 1.2 lots, which means you cannot buy more than 1.2 lots. And if things go badly, you'll get a margin call very quickly. Then the other problem that you have to be wary of is, just like any other business model, there'll always be scams. So in my opinion, if you're going to choose a prop firm, look at how long they've been opened, look at some testimonials both on social media as well as on YouTube, as well as on Google. There's a lot of information out there. I'll generally avoid the ones that have been open for less than a year, because they don't have proven track record, and they could just be scams basically. But that's just, not all of them are scams, but that's just something you have to keep in the back of your mind. The other bad part, this is for all of them, guys, these are a business. All prop firms are a business, and as a business they want to position themselves in a position where it's a win-win for themselves. For instance, they know that more than 80% of traders fail because of the trading psychology, insufficient capital, poor risk management. So even the ones that are taking the challenges, most of them fail. And if you fail, they get your money, there's no refund. If you pass, they give you the money and you have to trade within their rules. And as you are trading within their rules, if you make money, you get to share part of the profit, so that's a win for them. But you just have to remember, these guys, these are a business. Now, I would like to conclude by asking, answering the question, is a prop firm a good idea if, and who can use it? A prop firm is a good idea if you don't have enough capital, but you have backtested your strategy, you have journaled more than 300 trades, you know your win rate, or win percentage, you know your risk to reward ratios, you have got a strategy which you are confident about. It's a good idea. If you can put like $600 and be able to trade with $100,000 account, If you can make something like 5%, that's 5,000. If you're assuming a 50-50 split, that's 2,500, which is very difficult to make if you have $600. Think about it, to make $2,500 with 600. It's quite hard. It's really hard, especially if you are following the risk management rules, which I strongly advise you do, otherwise you're gonna blow an account. So guys, this is my morning video. I thought I'd just share this video about what exactly are prop firms, how you can make money from them. I'll be analyzing more of the prop firms one by one. I'll be explaining the good, the bad, who they are meant for. But this is just like an introductory video to prop firms if you do not know what they are. Feel free to leave a comment, a question, and of course, give our video a thumbs up if you thought it is of value. Thank you very much. Enjoy your day.